So Google was basically kind of got hit with their stock. Their share price went down to about $130 US. And I picked it up at 136 US dollars. Now the same Google that owns YouTube, the channel I'm broadcasting this blog on, is now 178 US dollars. My TikTok family, many of you have been asking me, what do I need to do to open up an investment account? I've said in previous videos that we've been programmed that we need to open up a savings account and a checking account. And to be honest with you people, a savings and a checking account, look at these flowers here. They remind me of Jamaica. They remind me of Jamaica, people. Now, a savings and a checking account will keep you poor. I'm keeping it real, people. A savings and a checking account doesn't pay you enough interest for you to get out of poverty. Doesn't happen. So therefore, I'm going to give you the basic of how to open up an investment account. It is simple. The point is that for the average person who goes to the bank, I believe most bank representatives will not talk to you about investment account until maybe you ask for it. But before I go to the video, people, let me say this to all of you. I'm not a financial advisor, neither am I an analyst. I've given information that have worked for me over the years, and I'm sharing that with you. So if you mess up, don't go broadcast and say, Jam can give you wrong information. I'm telling you, if you want to do your right investments, go see a professional. I'm just sharing ideas with you of what worked for me. So maybe it can help you and give you some ideas on what to do. Now, so when you go to the banks, most of them will not talk to you about investments account because based on your, I would say, profile, your financial profile, and also your intellectual depth, they realize that topic does not fit your, I would say, investment disposition. So that is why. Hi. Good. It doesn't fit your investment disposition. So this is why I am doing this. Now, if you're in Jamaica, there's two places you can go open up an investment account. One is with Sagicor, and number two is JMMB. Those two companies you can open up investments account with if you're in Jamaica. If you're in Canada, I use Investors Edge from CIBC. You can use Scotia iTrade. You can use TD, Ameritrade, or TD Investments account. You can use, there are many different financial institutions, and the cheaper ones you have like Quest Trade. I don't use Quest Trade because it doesn't give you enough kind of information and leverage, or so you can buy certain kind of stocks or so forth. So therefore, I don't use Quest Trade. But for small investors, you can use that. Now, even before you open up an investment account, let me say this, folks. I'm going to say this to you. If you are not disciplined, people, if you're not disciplined, don't even bother. Now, what do I mean by discipline? Look at this mango tree. You can see it. Look at these leaves here. They start to change, meaning that this tree is going to bud soon. And when it starts to bud, it means that by September in Rwanda, you'll have mangoes on these trees. That's discipline. Meaning that discipline follows the laws of nature. If you want to do well in investment, scamming doesn't work. Scammers don't live too long. Unless you're scammers in a rich country who knows what they're doing. But the average man scamming, it ain't gonna work. So you must be disciplined. Now, if you have discipline, good discipline, you will do well. You will do very well because you understand time. And as the saying goes, time is money. So when you go to the institutions, you can let them know that you want to open up an investment account. Speak to your personal financial advisor or personal advisor in the bank. You want to open an investment account. But to open up an investment account, there's something going to ask you. What is your risk tolerance? Meaning that, are you a long-term investor? Are you a trader? Or you're a medium risk investor? Meaning that, are you willing to take higher risk, go aggressive on some stocks? Or you will buy a basket of stocks like mutual funds, ETFs. And how well can you deal with the fluctuation of the market? And there's a saying in life, if you're not willing to lose your money, don't invest. If you're not willing to lose your initial investment, people, don't invest. Because guess what? There's no guarantee you're going to make it in the stock market. No guarantee at all. Stocks go up and stocks go down. But if you do your right research, which is not foolproof, if you do your right research by understanding management who runs the company, the history of the company, the balance sheet, read the income statement, and also get proper advice by listening to other, I would say, smarter people who can read the income statement of the company, you more likely will come out on top. However, that's still not foolproof. This is why I said that. Don't go tell folks that Jam can tell you to invest, because if you lose your money, don't blame me. I'm giving you ideas. Now, after you go see a personal banker, you open up an investment account. In Canada, there are two kinds of investment account. One account is a registered, meaning that in Canada we have something called the RRSP, Registered Retirement Savings Plan. You can put that money in your registered account. You don't pay taxes on the capital gains. That's one of the benefits of doing a registered account. If you have a TFSA, your tax-free savings account, the government gives you a certain amount every year to put in an investment account, and you don't pay taxes on the capital gains. The reason for that, the government is forcing Canadians to save and invest on their own, because guess what? What they're saying is that there will not be enough money left in the Canada pension plan so people can live the lifestyle. So the government is forcing us to invest on their own. So that's why they give us a tax break. You can put your LIRA, you can put your RPP and other investments that are registered into your registered account, and you don't pay taxes. Mind you, if you break it before the maturity date like the RSP, you will pay your taxes. So what it is, the government is forcing you to be disciplined to invest, so later on down the road that you'll have enough money for your retirement. It is simple as that. The next account is the non-registered. It's like your cash account, investment account. This account that you open up, you can put your cash in there anytime you want, and you can invest it. This account gives you margins, meaning that if it's a margin account you're in and you put $10,000, the banks will most likely, not all of them, will match it maybe 10,000 or 8,000. So you can trade that money also in the non-registered, what they call it, cash investment account. So you can buy and trade stocks at will. However, you will pay taxes on the capital gains that you earn in that account. Now, in that same account, you can trade options, you can trade puts, but that's for more like the serious investor, not for the average folks. So the non-registered account is a good way to move money from your checking account, your savings account, and you can put it in that non-registered account, and you can trade on the stock market. Now, here's some of the secrets to trading. This is why you have to read This is why you have to research. This is why you have to do due diligence and get the proper advice. As the Bible says, there is safety in the midst of wise counsel. Hang around smart people. Stop spending time with the idiots, the duds, the ones who have no sense, wasting time talking crap. If you want to get better, you have to hang around smart people. Yeah. So people, so having said that, now, here's some secrets to it that I've used over the years. Here's some secrets. Let me go this way. The sun is better this way. Now, here's some of the secrets, and it's more quiet around here. When you open up your trading investment account, most of those institutions have an app. So you see this? You see this, people? This is your cell phone. You can get a PhD, you can get a master's, you can become a millionaire, you can become a blogger like me. There's so many things you can do on this little machine. But the average person goes in this machine for three main things: sports, sex, and entertainment. That is why no matter what amount of technology you give the masses, there's a certain percentage who will always be poor because they're a victim of their passions. They're easily influenced by distractions and things that makes them laugh, not to think. You get it? The tips that you need, or the due diligence that you need when you open up your investment account. Folks, you need to have someone who can break down the balance sheet of each company. What is their profit, their EBITDA? What are their losses? Because you want to know if the company is properly managed, if they're losing a lot of money, or if it is wise for you to invest in the company. You want to invest in companies that also have a long history of every quarter they're doing well. You want to see a company that invests in its research and development, R&D. So what happened is that now, if you're going to trade in your non-registered account or your cash account, you must learn to understand the quarters of good companies, their quarters. Meaning that for every quarter, these companies have to release their income statement. Every quarter they has to release that. It tells you what their losses are, what their profits are, what their future perspective, so you can get a better understanding of where the company is go based on investment. For instance, a few weeks ago, Google stock fell. And it fell because I think they were didn't have a proper analysis on the AI business, because ChatGPT and NVIDIA is really going crazy with AI. So Google was basically got hit with their stock. Their share price went down to about $130 US. And I picked it up at 136 US dollars. Now the same Google that owns YouTube, the channel I'm broadcasting this blog on, is now 178 US dollars. From 136 to 178. That's a $42 gain in each share. Now that's how you do it. Because what happened? It's a good company, profitable company, but it missed on earnings and the forecast wasn't good. Now, as Warren Buffett says, be greedy when others are fearful, and be fearful when others are greedy. So because people sold and ran, I ran in, because the company has a strong history. So I bought the stock at a time when the company went on the dip, and I made it. Not every company will recover like that. So this is what I meant, that when you have a non-registered account, you have to do due diligence of doing your research, so that when the company misses on earnings, you can jump in, because it's never wise to buy on the high. Because when you buy on the high, you will lose money. It always wise to buy on the dip. Now, when you buy on the dip, you buy at a price that can give you a good return on investment. That is how you buy the stocks. So that is how I buy mine. Now, another way to look at it, you have to look long term. And when you're going long term, you have to go to a point and say, well, I'm going to wait 5, 10, 15, 20 years for this company to grow. That is how you buy long term. Now, the Dow at this point is about 38,000 plus. The S&P is about maybe about over 5,000, and the Nasdaq is about 17,000. So what happened? They're high. Interest rate is high, and those index funds are at a high at the moment. Now, you can go on buy and trade. I can't tell you what to do. But for me, who is a long-term investor, I don't buy like that. I don't buy like that. Now, if you look at the economy lately in North America, interest rate is high. And because interest rate is high, people are buying less real estate. People are buying less real estate because interest rate is high. And because they're buying less real estate now, what happens now, there's more what you call a slowdown in the market, in the real estate market. But the stock market is way up. Now, one of the biggest revenue generator for the stock for the economy are mortgages. Mortgages make one of the most profit for the banks. Now, if in the situation now where interest rates are high, people are buying less real estate. Because people are buying less real estate, you don't have that ripple effect in the economy. Because when real estate is booming, for instance, when interest rate falls, a lot of people are going to buy more real estate. It has a ripple effect. It has a ripple effect in the entire economy. People buy cars, people buy fridge, people buy furniture. So what happened? Real estate boomed the economy. It booms the economy. And because it booms the economy, what happens is that people started buying more houses. So right now, interest rate is high. And because interest rate is high at the moment, the problem is that now people are buying less property. But remember this, interest rate has to go down. Interest rate has to go down. There's no way about it. And because interest rate has to go down, what happens now, you're going to have a really boom in the economy. You're going to have a boom. Now, based on the stocks, for me right now, personally speaking, I would buy whether you like it or not. I would buy, say, pre-construction real estate at the moment. Why do I say that? Because whether I like it or not, about a year and a half or 2 years from now, interest rate more likely will drop. And because it will drop because the economy is booming, what happens? A lot of people are going to buy houses. Now, if I buy pre-construction now and interest rate drop in 2 years, the value of my property will go way up. Because of the value of my property will go way up, I will make money. Now, keep in mind, from my perspective, what goes up must come down. It's a fact when it comes to real estate. What goes up must come down. So while real estate goes up at this point, when interest rate drop, the price will go up. For instance, in Canada now, interest rate is high, so the real estate price has leveled off. But whether you like it or not, interest rate will go down. Interest rate just went down 0.25% now in Canada. And the governor of the bank says he wants interest rate to go down more. Now, what that will do, that will boost people to buy more real estate and the prices will go up. So if you had bought pre-construction now, eventually 2 years the price will go up because there's not enough supply in the market. Now, when it goes up now, this is where you profit now. You can flip, if it's your principal residence, you can flip the property and you can make a killing, or you can take the equity out. If you take the equity out of the property, you don't pay taxes, people. If you take the equity out, you don't pay taxes, even if it's your investment property. But if you sell it, the investment property, you pay taxes on the capital gains. avoidance is one of the ways the rich makes money. Tax compliance is for the poor person. Tax avoidance is for the rich. Tax evasion will get you to prison. You don't want tax evasion. You want tax avoidance legally. So if you take the equity out, you don't pay taxes. Now, you can take that equity out of it now, and you can buy real estate overseas. I'm here in Rwanda, great place to buy real estate. You can take the money out from the first world and bring it to the developing world, meaning that you're doing a lateral move, but you're making money. Now, the other thing you can do, you can let the equity sit in your account. Let the equity sit in your account. And what happens now, remember this, what I said, everything goes up and it must come down. It's a normal fact. It's a natural order. Everything that goes up must come down. Now, you remember I was talking about discipline? Look at this mango tree. You see? It started to bloom. You see those little mangoes come on it? That's discipline. Now, you want to invest, and if you're not willing to wait till your investment bloom, you'll never get rich. The point I'm trying to make is that if you let the equity sit in the account, say for instance, your house price go up about say $1 million, and what you bought it for like 700,000. So you have about 300,000 in equity. That equity that you get off, what you do with that equity, you can use it as a collateral. You can take that equity out and you can say park it in the account, and you can go invest in franchises, or let this equity sit there. Remember I said what goes up must come down. Now, as the stock market booms, eventually, whether you like it or not, people, it's a history of the stock market, it will fall. The stock market will fall, whether you like it or not. When it falls, that equity you take off that property and sit in your account, you just sit back and be like a vulture. You just sit back, no rush. Just watch the stock market tank out. Why tanks out? When interest rate is down, a lot of investors, middle class, they will buy second and third properties. They leverage themselves. One of the things with investments, it's not wise to leverage oneself. So what they'll buy second and third property, and they'll leverage themselves because guess what? Now, interest rate is low. They want to buy real estate. They don't want to make a killing. Some of them get emotional like I did in the past, and they hold. And when they hold and the stock market starts to tank now, what happens now, they get caught in the net because they didn't sell quickly enough. So what happens now, their mortgage payment is bigger than the equity in the house. So they're going to have to either walk away from the property and bankrupt, or they sell it at discount prices. The big vultures, the institutional investors now, they sit on top of the heap and wait for the carcasses to fall in real estate, and they just grab them up. In the midst of devastation catches king, and one man's demise is another man's gain. People, welcome to capitalism. It's business. So it is important to have a lot of cash put at the side, because as interest rates start to fall, it's setting up for a stock market crash. As interest rate is high at the moment, it's time to buy real estate that when pre-construction, that when the interest rate falls, then what happens is now that your property value will go up. You can flip it, or you can take the equity out and use it as collateral. And what you do now, when you put the cash at the side in the account now, you wait for the stock market to fall. And when the stock market falls, what you do now, you sit back and wait until it bottoms out. And you get the good blue chip stocks at an affordable price. You get the bank stocks at an affordable price, and you buy those stocks cheap. You buy them cheap. And when you buy them cheap, you just sit. You just sit, people. And when you sit and wait and let that bottom falls out, then that's how you'll get rich when the market boom again. It is simple. But like I said before, if you don't have discipline like this tree, you see this tree is filled with discipline, it takes time to grow palms. If you don't have the discipline, perish the thought, you will never get rich.
Nice.
On that note, Jamcan is out. A real investment I'm talking about. See you in the next video.